The Royal Mint is listing a gold-backed exchange-traded commodity on the London Stock Exchange this week. This is the first physically gold-backed ETC launched by the European Sovereign Mint and the Royal Mint's first listed financial product. Issuing, managing and distributing the product is specialist white label issuer Han ETF. And joining me now is Hector McNeil, co-CEO at Han ETF. Hector, good to see you.
Good to see you as well.
Tell us a bit about the launch then.
Yeah, no, we think it's a bit of a game changer for the ETF industry. You know, it's the first time a sovereign entity has got involved in an ETF in Europe. The Royal Mint's, you know, the oldest company in Britain. It was set up in 886 by Alfred the Great, so it's over 1100 years old. It's the 10th oldest company in the world. 100% owned by the UK Treasury, you know, and when people buy gold, they want to hedge systemic risk. So by definition, they want to be outside the financial system. And virtually every gold ETF that exists today either has their gold with HSBC or JP Morgan in London. So having your gold in Cardiff with a non-financial company was a really good hedge against systemic risk, we believe.
So is it about the systemic risk? I mean, because you pointed to the fact there are quite a lot of gold ETFs out there already. I mean, why is it that this is a market that you're interested in getting into? Yeah,
I mean, Han, we typically don't get involved in ETFs unless we think we can add value to the space. So we think there's got to be a pretty good set of unique selling points to the product. And I think the main ones here are obviously what we just talked about, the vault being in Cardiff and being outside the financial system. The other aspects to it is you can take physical delivery. I mean, one of the core businesses of the Royal Mint is to sell coins and bars to end clients, to retail. And you can do that, you can convert the ETF into that if you want to do that at a later date, and you can store them either at the Royal Mint or get them delivered to your house through DHL or UPS, whatever, believe it or not. And also we'll only be using post-2012 responsible sourced gold. The LBMA, the London Bullion Market Association, brought a policy in where you can actually check the provenance of the gold, so you can avoid conflict gold or you know, gold that's got questionable roots back in the day. And they brought that in 2012, and we'll only be bringing in using those gold bars. So it's as close as you're going to get to green gold out there as well. So that again is unique in the ETF space. Most of the gold ETFs out there have got legacy bars, and it'll be very difficult for them to do this. So you've got that aspect to it too. And also from a retail perspective, it's going to be quite nice as well, because it's going to be the equivalent of 100th of an ounce, which is around $15 a share, whereas most of the gold ETFs out there are a 10th of an ounce, which is about $150 a share. So, you know, it'll be much more democratic from a product perspective than exists today. So how did this collaboration with the Royal Mint come about? Because it's obviously not something that they typically do. I mean, they're mainly known for making coins. So how come they're branching into ETFs, and how did you sort of come about with this partnership? Yeah, I mean, it's interesting. When we went down there, we saw the factory. It's a 40-acre site set up in the late 60s when the UK government wanted to move them out of London due to risk of war and the Cold War and terrorism. They make 6 billion coins a year on the site for 60 countries, so almost a coin for every person on the planet. They also make all the fine coins like the Gruffalo and the Paddington Bears. And I think what the Royal Mint's trying to do is diversify their business. You know, obviously coin production is probably going to go down. People are using much more cashless ways to transact. You know, and I think given their provenance and security, I mean, the site used to be an MOD site as well, so it used to be protected by the army. So there's a lot of reasons why getting into this space makes sense as a diversification for the Royal Mint. And I think generally there'll be a subset of the more paranoid gold holders, you know, who want that extra layers of protection. And it's actually still a pretty competitive rate as well. It's at 22 basis points, where most of the market's at 40 basis points and the cheapest is at 19. So it's a slight premium to the cheapest, but we think that's the value you get extra from all those USPs we were talking about before. All right, brilliant. So can you give us a sense of your outlook for gold prices? Because we've obviously seen this impressive rally in spot gold over recent months. We know there's a lot of concerns about some of the risks out there, the fact that we've been in an upswing for markets over the last 10 years. There's a lot of other concerns, the likes of the coronavirus. Is that likely to spur gains for the precious metal, do you think? Yeah, I think I think people generally believe that, you know, with the clarity around Brexit now and probably Trump some getting back in. You know, there's probably likely to be a bit more of a trot for the markets, but people still feel there is things that could be around the corner that could trip that up. You know, whether it's inflation, you know, whether it's different views of where the Fed's going to go. You know, all these types of things mean that you should have an insurance asset in your portfolio. And still, whenever people talk about you know, fixed income or other sort of alternative assets, gold still has a massive place to play. I mean, you know, it's the only financial or currency system that for the last 10,000 years hasn't changed. You know, it's still in place. You know, I always say, you know, the value of gold, you know, you just have to look at it to see what the value of it is. It's the most beautiful thing you'll ever see. It's the only thing you can put in the ground and come back in 1,000 years. It looks exactly as it does then as when you put it in, as what it does today. So I think there's it's a great asset to have sort of 5 to 8% of your portfolio in. You know, in a way, you almost don't worry about what the performance of gold is, because if it's underperforming, it probably means the rest of your portfolio is performing. And if it does outperform, then obviously it's doing its job versus the rest of the portfolio. So I think, you know, for all probably some of the risks have dissipated, but you mentioned Corona, that, you know, obviously that's a great example of something we didn't foretell. It's an X factor in the market that didn't exist, and who knows, there could be plenty more of those around the corner. So we would always say to people, between 5 to 8% you should have in gold as a just-in-case asset, really.
So is the precious metals complex an area that you're looking to get more into with your ETFs? I mean, should we expect any other similar products in the pipeline anytime soon?
Yeah, I mean, I think the you know, we want to obviously get this one off the ground.
Yeah.
You know, it lists tomorrow, tickers RMAU. You know, we want to see how that goes. I mean, certainly the indications we're getting is it's going to be very strong. You know, we're launching it with $150 million from day one, which is the most I've ever in the 500 ETFs I've been involved in launching. It's the most I've ever had from a day one assets under management. You know, so from that perspective, you know, I'm expecting it to go very, very well. And I think if it does go well, then it would make absolute sense for, you know, for the enrollment to look at silver, platinum, palladium, maybe rhodium, you know, maybe a basket of those metals.
Yeah.
You know, it would make absolute sense, because we're already dealing and holding and managing all those precious metals already. So it would make absolute sense to do that.
Hector, thank you so much for your time.
Thank you.
That was Hector McNeil, co-CEO at Han ETF. I'm Victoria Scholar, and thanks for watching IGTV.